All right, guys, what is going on? Welcome back to the channel. Long time no see. I've been iced in out here in the winter storm or ice storm here. I know it's affecting a lot of people, and I do apologize, but we are back in action here on FOMC Day Live, January 28th, awaiting the FOMC press conference. Thank you guys for tuning in here at AJC for your FOMC coverage. We're going to be getting it started here in just a moment. Don't forget to tap the like button on the way in, and of course, check the links in the description if you want to trade crypto. Welcome in, James. Doeth the Bears cometh, or the Bulls goeth? Let me know, James, what do you think in the poll in the chat? Are we entering a bearish continuation, or is a Bitcoin crypto bull run on the horizon? Just getting a few things ready for this stream, guys. Thank you for bearing with us here. We are going to be tuning in live as soon as the press conference begins, but we'll also be keeping an eye on the price. Bitcoin currently slightly below $90,000 at $89,500. Let me know your predictions in the chat as we wait for Jerome Powell and the FOMC live press conference. All right, guys, who is ready to get this stream rolling? I have an announcement to make as well, by the way. Let's just get it started. Thank you guys for tuning in today. Welcome to the stream, guys. Welcome to the channel. Welcome to Average Joe Crypto, where we make crypto simple and easy for the average person to understand. Let's get right into it. All right. What is going on, and welcome. Good to see you, Strikeheart, bro. It's been a minute. We are going through some things here across the board, man. Everybody in the region getting affected by the ice storm, and myself included. And it's been okay, though. We've been okay. We've just been trapped here, and I've been very, very busy. But today is a very big day. And the FOMC should begin here any moment. We'll tune into Jerome Powell, see what he has to say, see what the tone is. And then we will go into the markets. We'll check and look at Bitcoin's price action, see what we've been doing recently. And I do want to point out, I really want to point out the fact that we got to look at this. Where are we at here? Here we go. So we got to look at this, man. I do want to just recap on Ethereum real quick. Just real quick on ETH as we await for Jerome Powell here in the press conference to begin. I just want to recap on Ethereum, where I was looking at this target of $2,800 if we broke bearish. If we did not reclaim 3K here, which we did, and we got rejected massively on the 4-hour right there. And, you know, I had the idea here, this measurement is simply the measure move of this pattern here, which we did not break out of directly. However, the support at 2,800 still played a crucial role as this target. And it's where my measured move pointed as well. So I just wanted to point that out, recap on that, and point out the fact that we hit that perfectly. If you were watching that stream when we put in that target of $2,800, then you know that we were looking at that target way before we ever even consolidated out of that pattern. And boom, Ethereum hit it perfectly into the wick of the 4-hour candles. What a beautiful target, what a beautiful measure move hit. And I just had to recap that very quickly for you guys. And we'll go back here. We're going to take a look at Bitcoin as it creeps back up to 90,000 as we still await the press conference, which we are going to refresh to make sure. Oh yeah, we're still live with the elevator music. So still awaiting Jerome Powell here in the next couple of minutes. It should begin any moment now. Any moment now. I am going to move myself down here just a little bit because, you know, we're here for Jerome Powell. We're not here for me. Let's go. Let's go. Let's go. And let's mute that music real quick, and we'll wait for this to begin. And here we go. All right.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy expanded at a solid pace last year and is coming into 2026 on a firm footing. While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. The temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter. In the labor market, indicators suggest that conditions may be stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including openings, layoffs, hiring, and nominal wage growth, show little change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
All right, here comes the questions. Let's see how the tone is today.
Chris Rugaber at Associated Press. Thank you. I wanted to ask that, you attended the Supreme Court.
Good afternoon, Grow with Loki. Welcome back.
And Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously in, I guess, 1985 or so. So it's precedented, and I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. You mentioned last month that the household survey might be distorted, and you also mentioned the potential for overcounting jobs, which would suggest that we're still in a negative hiring pace. So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized? Thank you.
So, yeah, really two questions. One is, so we're getting through the distortions in the data from the shutdown. However big they were in November, they're smaller in December. So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there. The reason why we changed the statement, let me pull it out, was simply, it used to say that judges that downside risks to employment rose in recent months. So we saw, data coming in which suggests some signs of stabilization. I wouldn't go too far with that, but some signs of stabilization. There are also some signs of continued cooling. And so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting, and that should matter for labor demand and for employment over time. So for those two reasons, we thought we would take that language out of the statement.
Nick Timrose, The Wall Street Journal. Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today I'm simply going to refer you to the statement that I made on January 11. I'm not going to expand on it or repeat it. So I'm just not going to. This is really about the press conference and the economy and what we did today.
Powell's fed up, bro.
Some ancillary areas, but I'm not going to be getting into that.
He don't care. He's just fed up at this point. He's like, I'm out of here anyways.
I have nothing for you on that today.
I have nothing for you.
Mike.
Nothing for you.
Michael McKee from Bloomberg Radio TV.
No rate cuts for you.
Decision on whether you would remain
Bitcoin
as the
steady at
governor of the
89,000.
Federal Reserve, and if so, would you tell us what it is? And if not, when might we anticipate a decision?
No, and I really, once again, have nothing for you on that today. That either.
Why would you want to leave it all under the circumstances?
Again, I don't want to get into this. It's not something there's a time and place for these questions.
Can't blame the man,
but
Can't blame the man.
I'm going to be getting into today. Thank you.
Thank you.
Can't blame him.
Claire Jones, Financial Times. Thanks a lot for taking my questions. In another one that might, lead to a similar answer. We've seen quite big movements in the dollar over recent days. What do you think is driving the U.S. currency lower? And have you been at all concerned just by the extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role. So, I have nothing for you.
But what's your view on the market movements? What do you think behind them? Is it asset managers diversifying? Is it?
Yeah, I just don't. We don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury Department has that. It's their role, their bailiwick, and we.
What is going on, Green Fingers? My guy, I hope you're doing well, bro.
We don't comment on the dollar. Sorry.
Hi, Chair Powell. Neil Irwin with Axios. Obviously, no SEP in this meeting, but in light of the slight firming up of the language around growth in the labor market in the statement, should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Well, First of all, if you look at the incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the Facebook, everything comes in suggesting that this year.
I got nothing
starts
for
off
you.
on a-
Bro, that's the new
on a
title
strong
now.
foot For growth.
Powell has nothing for you.
Inflation performed about as expected, and as I mentioned, some of the
Jerome
data
Powell has
came
nothing for
in
you.
Suggesting, we're evidence of stabilization. So it's overall a stronger forecast, really.
Oh.
If that's your question.
What was that?
I'm not sure I answered your question.
Was that
But in terms of timing or pacing of any...
was that dovish?
easing.
So
Was that a dovish tone right there?
What we'd say about
We may
this
have to go
was
back
that
and look at some of
after
this.
this meeting, after the 3 recent rate cuts, we're well positioned to address
Dissect
the
it.
risks that we face on both sides of our dual mandate, and we'll continue to make our decisions meeting by meeting based on
Loki,
the
good
incoming data
point.
implications for and the outlook and the balance of risks.
Very good
Haven't
point,
made any
guys. If you're
decisions
just
about
now
future
joining, don't
meetings,
forget to smash the
but
like. It really helps the stream reach more
economy's
traders,
growing
more
at a solid
people.
pace. The unemployment rate has been
Thank you so
broadly
much.
stable, and inflation remains somewhat elevated. So we'll be looking to our goal variables and letting the data light the way for us.
Bitcoin so far not liking what's going on.
Steve Leisman, CNBC, and sticking with questions you might answer. Thank you.
A different FOMC meeting
previously, I
today.
believe,
A little bit different, right?
The current
Little bit
policy rate being
different.
at the higher end of neutral. And if you look at the longer run, the S&P and the longer run rates, 16 of 19
Thank you, guys.
are actually below there on their long run. Is the Fed still in a process of bringing it down towards a middle range of neutral? And what would it take to get there?
So the count I did was that 4 of the 19 were at or above that. And maybe I missed by 1, but I thought it was 4. And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible estimates. This is the higher end of that range, but so for some people they think it's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say that policy's significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. It's in the eye of the beholder, and of course no one knows with any precision.
God.
So you had to follow up.
I get what you're saying, but some officials have described the Fed being in a mode of bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah, no, I would say if you look at the SEP from December, most people had additional normalization. But at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 100. It's 175 basis points we've cut since we began cutting in September of 2024. So you've moved now to, Fed funds is running just a little below 3.65%. So you've moved a good way, and we think we're well positioned here to watch how the economy performs, look at the data. We're not making decisions about future meetings, but we do think we're well positioned after those 3 cuts to let the data speak to us.
Amira. Thank you, Chair
Dovish
Powell.
or
Now, Whitley
hawkish?
from Bloomberg News. To what extent did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but committee pretty broadly for holding today. We're not trying to articulate a test for when to next cut or whether to cut at the next meeting. What we're saying is we're well positioned as we make decisions meeting by meeting, looking at the incoming data, evolving outlook, and all that. And we're in a position where we still have some tension between employment and inflation, but it's less than it was. I think that the upside risks to inflation and the downside risks have probably both diminished a bit. So, we'll be looking at that. It's about how you weigh the risks to the 2 goals and how big those, and quantify them. And so there are different views on the committee, and, we'll find our way forward as the data evolve.
And
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Has the effects of tariffs already moved through the economy on prices?
A lot of it has. So basically, there are many different estimates, and they're all highly uncertain. But most of the overrun.
Greenfinger's life under the rock is
tariffs,
beautiful.
and that's actually good news.
It's
because
beautiful, man. There's not a bunch
tariffs, it
of
might mean
hostile
it's from
people
demand, and you know that's a harder problem to solve.
staring
we
at
think
you.
Tariffs are likely to move through and be a one-time price increase. So most of the overshoot, if you were to take that out, you'd get, and you would, I mean, inflation, core PCE inflation is running just a bit above 2%, x the effects of tariffs on goods. And the other good news is, if you look away from goods and look at services, you do see ongoing disinflation in all the categories of services. So that's a healthy development. So that's what's going on. The expectation is that we will see the effects of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff increases that are begun. And that's what we expect to see over the course of this year. If we see that, if we see that, that would be something that tells us that we can loosen policy. Also, if we see something that suggests that the labor market is not stabilizing, that in fact the downside risks reemerge or the data just get worse, we'd have to look at both of those. We have a two-sided mandate.
If I could, if President Trump does pick a new Fed chairman before May, what does that look like? How would you work with that person, and what does that transition period look like?
I don't have anything for you on that. That will depend on Congress's actions and things I can't speculate on.
Howard.
Howard Schneider with Reuters. Thank you for taking our questions. Given the changes in the statement and all you've said so far, is it fair to describe risks to both sides of the Band-Aid as roughly balanced right now? And is the next move necessarily down?
I'd say that the upside risks to inflation and the downside risks to employment have diminished, but they still exist. So there's still some tension between the mandates. Are they fully in balance? Hard to say. And we think our policy's in a good place. I've just discussed reasons why we might change our policy, and we'll just have to see how the data lead us.
I'm wondering, a minute ago you said you felt expectations were consistent with your mandate, that the 2 and the 10-year break-evens have moved quite notably in the last couple of weeks, I believe. Is there any concern on that front?
I mean, I recently looked at all of the both survey and market-based short-term inflation expectations have come way down. They were in a good place at the beginning of last year. They spiked around Liberation Day, and now they've fully retraced in the last few months. So that's very comforting. And the longer-term inflation expectations have remained in places that are very consistent with 2% inflation over time. So expectations have been solid, and they reflect confidence in the return to 2% inflation.
Andrew.
Apologies if this is a little bit repetitive, but in the past you've said that the reason you cut rates was that the risk to the labor market was greater than the risk to the inflation side. Is that still true?
We haven't made. You're right. We saw the labor market weakening, and we acted. And I think that was the appropriate thing to do. We will always act to address what we see as the economy moving away from our goals. Risks to both of the variables are a little less. I think the upside risk to inflation, again, a little bit less, and the downside risk to employment, a little less. I just would say that I'm not making a judgment about how, one of them is more at risk than the other, just that the risks to both of them have diminished.
Okay, thanks. BIS wrote a paper last summer which concluded that global investors were hedging their dollar exposures in ways that previously they hadn't because of policy uncertainty. Do you agree with BIS?
We really don't see much at all about that whole story. There's just not a lot of data that suggests that there's much to that.
Thanks.
Anna.
Anna Swanson with the New York Times. Can you talk more about what you would need to see in the labor market to conclude it's time to resume easing? Do you need to see further deterioration in the labor market, or would it be enough for inflation to soften?
So we'll always be looking at both things. And so there could be combinations, infinite numbers of combinations that would cause us to want to move. Certainly, a weakening labor market would be an argument for loosening. But what's happening with inflation? If inflation were at the same time getting worse, you just have a very difficult situation there. So we'll be looking at both. Clearly, a weakening labor market calls for cutting. A stronger labor market says that the rates are in a good place. We'll have to be making similar judgments, too, on inflation, though.
And if inflation does pick back up and the labor market doesn't show further signs of deterioration, is there a chance that you could raise rates rather than simply remaining on hold? What would you need to see to consider hiking?
We don't take things off the table, but it isn't anybody's base case right now, anybody's base case, that the next move will be a rate hike. But, ultimately we'll do what we think is the right thing. But that's not where people's expectations are right now.
Victoria. Hi, Victoria Guida with Politico. I wanted to ask, you've talked in the past about concerns about the U.S. fiscal trajectory, and we've seen in the Japanese bond market a lot of turmoil recently, in part due to concerns over their fiscal and long-term economic outlook. So do you worry that the U.S. could at some point find itself in a similar situation to Japan, whether for fiscal or demographic reasons?
Over time, you've seen that U.S. rates have remained they haven't moved a lot, really for a while, but they haven't moved a lot because of what's been happening in Japan. So it's more of an over time thing. The U.S. federal budget deficit is, uncontroversially on an unsustainable path. The level of debt is not unsustainable. It's very much sustainable, but the path is unsustainable. And the sooner we work on it, the better. But right now we're running a very large deficit at essentially full employment, and so the fiscal picture needs to be addressed, and it's not really being addressed. So that's important. I'm not in any way connecting it to some sort of near-term market event, but ultimately it's something we'll have to deal with, and that in the end game, that's where you wind up, is in some kind of a difficult thing. But that's not where we are. It's not where Japan is either. But it's certainly not where we are right now.
Does it reduce the effect of your rate cuts that longer-term rates have overall not really budged that much?
I wouldn't say that. The thing is, technically, higher longer-term rates means less accommodative financial conditions. But remember, many things move longer-term rates. It's not mostly what happens on the short end. There can be effects of longer-term rates from our moving our policy around, but it's much more assessments of the fiscal path and fiscal policies and risks and things like that move the 10-year around. You can look back at and find periods where we've been very actively moving the policy rate over the course of a year, and over the course of that year, the 10-year is exactly where it started. So there's not a tight link between 10-year rates and the overnight rate.
Elizabeth. Thanks so much, Elizabeth Schulze with ABC News. Republican Senator Tom Tillis, who sits on the Senate Banking Committee, said he will block any Fed nominee, including the chair, until this investigation into you is resolved. Do you support this move by the senator, and what conversations have you had with the senator?
I've got nothing for you on that.
More broadly, what would happen to American households if the Federal Reserve loses its ability to operate independent from politics?
So really, the point of independence is not to protect policymakers or anything like that. It just is that every advanced economy democracy in the world has come around to this common practice. It's just an institutional arrangement that has served the people well, and that is to have a separation between, to not have direct elected official control over the setting of monetary policy. And the reason is that monetary policy can be used, through an election cycle to affect the economy in a way that will be politically worthwhile. So I'm not talking about the U.S. context. This is every advanced economy democracy of any size. So it's a good practice. It's pretty much everywhere among countries that look at all like the United States. And I think if you lose that, first of all, it would be hard to restore the credibility of the institution if people lose their faith that we're making decisions, only on the basis of our assessment of what's best for everyone, for the wide public, rather than trying to benefit one group or another. If you lose that, it's going to be hard to retain it. And we haven't lost it. I don't believe we will. I certainly hope we won't. But it's very important, and the reason it's important is that it's enabled central
Yes,
banks
green fingers, I will be.
not to be perfect, but to serve the public well.
You're confident it can maintain that independence at this point?
Yes. I mean, I'm strongly committed to that, and so are my colleagues.
Archie.
Archie Hall from The Economist. On that sort of stabilization of the labor market question, how much do you see the weakening we saw over the past 6 months, year, as a kind of data mirage around immigration and the government shutdown and so on that's now resolved? Or how much have we seen a kind of real underlying firming up in the state of the labor market, do you think?
Well, part of it is, to your point, part of it just is that labor supply, growth in labor supply has come to essentially a halt from a fairly fast clip of growth over the last couple of years, driven by immigration, and then the halt being driven by a very sudden stop in immigration. So many outcomes were possible with that. Supply came way down. It turns out that demand for labor also came down a very similar amount, maybe just a little bit more, which is why the unemployment rate has gone up. So I don't know whether that's a coincidence or not, but that's what's happened with that part. But if you look at other things, like, for example, just to pick a couple, the Conference Board's measure of job availability that came out, I don't know, was it yesterday or today? But, it shows, it's a survey showing that workers feel like job availability it's a very low reading. Just one reading, but it's an indication of softening. People, part-time for economic reasons, which is a category within the broader U6 category measure, has moved up significantly. So there are lots of, and I could go on and on, there are lots of little places that suggest that the labor market has softened. But you're right, part of payroll jobs softening is that both the supply and demand for labor has come down. Growth in those two have come down. So that makes it a difficult time to read the labor market. So imagine they both came down a lot to the point where there is no job growth. Is that full employment? In a sense, it is. If demand and supply are in balance, that you could say that's full employment. At the same time, do we really feel like that's a maximum employment economy? It's very challenging and quite unusual situation.
Thanks. And one more on growth and the kind of strong growth outlook, your strengthening growth outlook you're now seeing. How much of that is the fiscal stimulus we're seeing from the beautiful bill, the tax cuts, and all of that? So
you're seeing it already. You don't have much of the fiscal. I think the outlook, you're right. It's financial conditions and it's fiscal policy for 26. But you've got strong consumption that's been happening before financial conditions have been supportive, but before the fiscal effects really are shown. So essentially the economy has once again surprised us with its strength, not for the first time. Consumer spending, although it's uneven across income categories, but consumer spending overall numbers are good, and we're benefiting from the AI build out of data centers. That's another thing we're benefiting from. But the economy overall, the growth is on a solid footing. It looks like, and it's not just those things. It's just the consumer is filling out surveys that sound really negative, and then spending. So there's been a disconnect for some time between downbeat surveys and reasonably good spending data.
Thanks, Chair Powell. Christine Romans from NBC News. You talked about how consumer spending is uneven. The president calls inflation defeated and solved. The FOMC says it's a somewhat elevated inflation. But you talked about those customer survey or those consumer sentiment surveys and public opinion polls that show that most families say the cost of living is still issue number one. What is the conversation around the table with your colleagues about how wealthier consumers seem to be driving so much of the economy, and why so many families still feel like they just can't make ends meet after 5 years of rising prices. What is that discussion like?
So a couple things. One, there's something to it in that we know that higher income households that tend to own real estate and tend to own stocks, securities, and those assets have been going up in value, and increases in wealth do support spending over time. So, and that's clearly a part of the story. We also know that for some time now, for a year or more, we've been hearing from retailers, for example, that serve lower income customers, whether it be food or the big box stores or anything. They're saying the same thing, which is our consumers are looking to economize. They're trading down from brands, and they're buying less, and it's changing their buying habits and that kind of thing. So we're seeing that, and that is a reality of what we're seeing. They're still consuming, but they're feeling it in a different way. I would say more broadly on affordability, we have a vast network through the reserve banks and also through the Board of Governors, where we talk to small and large businesses and households, and so we do hear a lot about affordability, and we take that very seriously, and we take it to heart, because one of our jobs is price stability, and so the best thing we can do for people who are feeling that squeeze is to keep inflation under control, and frankly, to finish the job of getting inflation back down to 2%.
You mentioned the AI build-out as being a positive for economic growth this year. I wonder, as you look at the weakest year last year for job creation of a non-recession year since like 2003, are you concerned about AI maybe supplanting more entry-level work and entry-level jobs, and how does that play into what you're watching about the labor market?
So everyone, of course, is watching AI and the deployment, and trying to understand exactly what's happening. And there's a wide range of possibilities. It's hard to say. And of course, anyone who uses it is amazed at what it can accomplish, right? So every technological wave will eliminate some jobs and create other jobs. And it's always been the case. If you look back, wave after wave after wave, there will be some disruption, but ultimately technology increases productivity, which is the basis for rising wages. And it may not all happen immediately, but over time, it's what enables incomes to rise over time, is rising productivity. So and we always ask, well, this is going to be different, is it going to be different? And we don't know. And we may, in any case, see in the short term jobs that are being eliminated by the capabilities of AI. We may see that. We just don't know what the overall effect is going to be. So how to think about it in macroeconomic terms, it's very hard. We can look at the aggregate data. We can analyze, for example, there is some connection, it appears, between the low hiring rate for recent college grads and AI, but it's not the main or only driver. You hear large companies, though, many of them saying that they either won't be hiring for some time, or that they're hiring less, or that they're laying people off, and they tend to refer to AI when they do that. So we're all watching and learning, and it could certainly have pretty significant effects on the economy, the workforce, and our society. We don't really have the tools to address the concerns that may arise, but we have a lot of people who focus on analyzing it and try to understand what the macroeconomic implications are, which is our job.
Beyi. Thank you, Chair Powell. Beyi from AFP News Agency. You mentioned earlier that on inflation, the broad expectation was for a one-time price increase and then for inflation to come down. And I was wondering, is your expectation still for inflation to start cooling in the second half of 2026? And if you could elaborate how far we are from target currently. Thank you.
So how far we are from target is, as I mentioned in my opening remarks, we had 3.0% core PCE inflation over the 12 months ending in December, and that's pretty much what we had the year before. So on net, no progress, but the story behind that is modestly positive in that most of the overshoot was in goods prices, which we think is related to tariffs, and ultimately we think those will not result in inflation as opposed to a one-time price increase. Okay, so that's where it is. In terms of, you asked, so no one thinks they will, ex ante understand really clearly, precisely when this will happen. But there's an expectation that sometime in the middle quarters of the year, we'll see tariff inflation topping out. So what we do is when a tariff is put in place, we track the effect of those tariffs over a 6, 7, 8, 9 month period, and you can see, for that tariff how long it takes to reach a place where it's affected the price level, and that's it. So we're getting better at that, and our estimate is that it'll be sometime in the middle of the year, but I wouldn't look for great precision in that. But we'll be able to see whether things are moving in that direction. I think we'll be able to see.
Richard Escobedo.
Thanks, Chair Powell. I'm Richard Escobedo with CBS News. I want to look outside the U.S. about what's happening outside our shores and how it impacts the U.S. Canada's Prime Minister said last week that there's been a rupture in the global order, and I wonder how you're thinking about geopolitical risk as it relates to the U.S. economy.
So I can't comment on that speech or statement or anything like that. Geopolitical risk for us is, a lot of it is around energy, oil. And so far we haven't, for all the turmoil, oil prices have come down, as you know, and so we don't really see much. Longer than that, it's trade, and the trade, the economy, our economy has pulled through pretty well, you'd have to say, given the very significant changes in trade policy. The U.S. economy has pushed right through. Partly that is that the way that what was implemented was significantly less than what was announced at the beginning. In addition, other countries didn't retaliate, and in addition, a good part of it hasn't been passed through to consumers yet. It's being taken by companies that stand between the consumer and the exporter. So that's where that is.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. With third quarter GDP growing at 4.4% and the fourth quarter expected to have a 5 handle on it as to what the Atlanta Fed is predicting, at a time when you had a government shutdown and we thought that was going to shave off some growth, you've also got the fiscal tailwinds you've talked about, big tax refunds coming, potential tariff dividend. How could you cut rates and not spur inflation in that environment?
Well, we didn't cut rates today, but it depends on how fast potential output is growing, right? I'm just asking in principle. I'm not saying this is what's happening, but there's growth and there's how fast the potential is growing, and at a time of high productivity growth, potential output is rising. So it really matters whether potential output is growing as fast as actual output, and it would matter over time. The numbers you cite were for quarters, and quarterly GDP is, you need to look at 12 months because quarterly GDP can be very lumpy. GDP was negative in the first quarter last year. So the overall, over the year, the numbers were nothing like that. It was more in the mid-2s for the year.
And how do you explain the divide right now between strong economic growth and the job market? Is it productivity that's filling the gap? And is productivity being driven by AI at this point?
So there has been, you're right, there has been a divide of solid growth, but what looked like a weakening labor market. And that can be explained by rising productivity. But I would say we do see signs of certainly of the unemployment rate stabilizing. So it may be we're seeing the beginning of the resolution of those two things. Also, as you probably know, the lore is that when GDP and the labor market get into an argument, in the end, labor market data is more reliable. GDP data is just very hard to collect and understand, but nonetheless, I think we may be seeing that tension resolving a little bit. Too soon to say with any confidence, though.
Matt Egan.
Matt Egan with CNN. Chair Powell, after today, you have 2 meetings left as Fed chair. You've obviously experienced a lot during your time as Fed chair, served under multiple presidents. I'm wondering what advice you have for whoever your successor might be.
Honestly, I'd say a couple of things. One is stay out of elected politics. Don't get pulled into elected politics. Don't do it. And that's another thing. Well, another is that, our window into democratic accountability is Congress. And it's not a passive burden for us to go to Congress and talk to people. It's an affirmative, regular obligation. If you want democratic legitimacy, you earn it by your interactions with our elected overseers. And so it's something you need to work hard at, and I have worked hard at it. So, and the last thing is, it's easy to criticize government institutions so many ways. I will tell whoever it is, you're about to meet the most qualified group of people you not only have ever worked with, you will ever work with. And when you meet Fed staff, and not everybody's perfect, but there isn't a better cadre of professionals more dedicated to the public well-being than work at the Fed.
Thanks for that answer. If I may follow up, as I'm sure you've noticed, gold and silver prices have experienced historic gains of late. And I'm wondering how much attention, if any, you pay to those moves and what message you may take from these significant price increases we've seen for precious metals.
Don't take much message macroeconomically. The argument can be made that we're losing credibility or something. It's simply not the case. If you look at where inflation expectations are, our credibility is right where it needs to be. So we look at those things. We don't get spun up over particular asset price changes, although we do monitor them, of course.
Nicole, for the last question.
Hi, Nicole Goodkind, Barron's. Some prominent critics have charged that the Fed's economic models are somewhat backward-looking, but should be more forward-looking, incorporating things like productivity increases from AI. How do you incorporate current and future developments into your analysis and decision-making, and do you have an answer to those critics?
Yeah, so by and large, those criticisms, as somebody on the inside, they just don't make sense, and I'll tell you why. Every FOMC participant writes down a forecast every quarter, right? The summary of economic projections, and that's the basis for how we think about the economy. So, the other thing is, what an economic model can do is it can grind up all the data for the last number of years, 50 years, let's say, and it can identify what are the relationships between variables A, B, C, D, and all that kind of thing. And it can tell you if you change one of those variables, this is what should happen in the macroeconomy. That's just the way it works. However, the structure of the macroeconomy is constantly changing. For example, we hadn't had a pandemic in 100 years. It wasn't in the model, and we knew it from the very beginning. It was not in the model. A trade war of this scope, we'd never had that in 100 years. And so there's great uncertainty at different points. Another thing I'll say is, when it comes to, technological developments that raise potential output, some kind of technological revolution, like happened in the 90s here, and like maybe happening now with AI, we're all over that. And everyone studies those periods, and we're very clear-eyed about the possibility that this higher productivity may persist, and also that it may not. We're not. No one's sitting here unaware of the possibility of higher productivity. We've been talking about it for 3
Guys, don't
years.
forget to stick around. We will be covering the market analysis
It's been going on for
as soon
5
as
or
the
6
press
years.
conference
We've had
ends.
productivity higher. We've been talking about it that whole time. So it's very much on our minds, and we are well aware that higher productivity means higher potential output, and it changes the way you think about potentially inflation, growth, labor market, and all those things. That's all in our models. I mean, if it's just a question of using better models, bring them on. Where are they? We'll take them. But I think, we certainly are in contact with anybody who does economic modeling, and we're always looking to do better at that. But
Thank you, guys. I do appreciate it very much. What is going on, Dak? The market barely moved.
A lot about tariffs and past
I
years, we've
agree.
been talking a lot
We are
about
still
them
at
for the past
89,000
few
Bitcoin.
months. The trade landscape is still in
I
a
will
constant
say,
state of flux.
I do like that Ethereum is kind of holding at $3,000.
I'm wondering how you actually
We're going to talk about it.
track these, what data or channels are most critical to follow this in real time.
Trade?
Yeah, the impact of tariffs and how they're changing.
Yeah, I think our staff has done a really nice job on that, and they've kind of put it together in real time. So as I mentioned, a tariff gets put in place, you can pretty much track its effects on pricing and on everything, and so you build a model up from all of the tariffs. At the beginning, it was very much of a forecast. Now it's every cycle that goes by, it becomes more informed by actual data, and our forecasts were not far off. What changed was, as I think I said earlier, what was implemented was smaller than what was announced. In addition, we didn't see retaliation internationally, and I think people did generally expect that because we saw that in the past, and that really mattered too. And then the other thing is that pass-through didn't know how fast that was going to be to consumers, didn't know how much exporters would take, how much companies in the
Dak, I
middle would take,
appreciate
and how
your
much the consumer would
input
take.
there
And
in the
it turns
chat
out it's a lot of
on
companies in the
Ethereum.
middle who, by the way, are pretty strongly committed to passing the rest of it through, which is one of the reasons why we need to keep our eye on inflation and not declare victory prematurely.
Thank you.
We're done?
We're done.
Okay. Thank you very much.
And there it was, guys. Jerome Powell has spoke. And what is going to happen now that the FOMC meeting is over? And what was the tone? What was the tone during that meeting, guys? What were we looking at there? And what are we going to expect? Ooh, let me turn that down. What are we going to expect going forward here? Now, we're going to go ahead and jump straight into the market here. I will say, I agree over there. I agree. We're looking at something quite ridiculous. But I will say, this FOMC meeting, we have seen, honestly, less volatility with Bitcoin. During the meeting, we did have, here we go, we got a nice spike to the upside here as Jerome Powell was speaking, and then a quick, sharp move back to the downside. Let's go ahead and zoom out just a little here and take a look at what's going on with Bitcoin real quick. We'll move on to as well. We'll do Bitcoin. We'll do Ethereum. I do want to take a look at ETH as it is trying to hold $3,000 very, very, very strongly. ETH is trying its best to hold $3,000, man. And if ETH could hold 3K, that would be beautiful. I do like what Dak said in the chat there. Let me know what you guys think. What is your predictions as we have seen the interest rates remain? We did not get another interest rate cut yet, but the rates are staying stable. We did notice that Jerome Powell seemed a bit dovish, less hawkish and a bit more dovish in some of his statements. And could we see the price action react to that? I think we already are. Now, Bitcoin Ethereum and Bitcoin both reacting right now. And really ETH, look at ETH right here. I do want to point out that, I tell you what, we've been pretty well on point here for quite some time with Bitcoin, right? We've been pretty well on point with Bitcoin. Now, Ethereum is trying to hold this 3K level. We're going to jump right into ETH. Real quickly though, Bitcoin on the 15-minute. Real quickly. Playing into the longer term time frame here, it looks like Bitcoin could be trying to push to the upside actually. Unless we see this form on the 4-hour, short-term push absolutely could be doable, but we are looking at this breakdown point up here. Just want to look at this. Playing into the longer term time frames, 4-hour to the daily. Playing into the daily. And we're still looking at this, right? The possibility of that. I will say the daily time frame for Bitcoin is 100% breaking. We've lost support. We've ran back up to retest that, try to reclaim that support. We're getting rejected right now on the daily. So Bitcoin needs a daily candle close above. Really, Bitcoin needs a daily candle close above 91,000. Get a daily candle close above 91,000. And then maybe you might be able to hold this support, daily support, and go higher. Otherwise, this is going to reject, and as far as I'm concerned, that's going to reject. You know, you're retesting where you broke out of this support right here. Now, could this be a bear trap, little fake out? Absolutely. But for that to happen, you're going to have to get above 91,000. So Bitcoin needs to break and hold above 91,000. Green Fingers, what's going on, man? Welcome back. Yes, Jerome Powell has spoke. Jerome Powell has spoke. And not much has changed. I had to jump on and cover this. It's been almost impossible to get on here with what's been going on, but had to jump on and cover the market here to see what we're doing. I do believe that this is a good possibility. Bitcoin needs to get above 91,000, or we're gonna plummet right here. If we don't get above 91,000, Bitcoin is going to crash, and we might even lose 80,000. We might even lose 80,000 if we don't reclaim 91. It's just a matter of time at this point. Now, the only other option, in my opinion, on the daily, it looks like Bitcoin has lost support and we're retesting that resistance. But if we can get above 91,000, if we get a daily close above 91,000, I say we run. I say we run, and resistance is right at 100,000. Right at 100,000, right up in my box, my purple box. I like to use these purple boxes. And once that happens, that's beautiful. That's beautiful, but that hasn't happened yet. So until that happens, we don't have any reason really. There's got to be. I will say though, after listening to Powell, I will say that it seems like to me, I heard a lot of neutral and dovish statements. He really did not have a. It was not a. It really wasn't a bad outlook. I would love to know what you guys think. I don't think it was a very bad outlook. Now, is Bitcoin entering a bearish continuation, or is a Bitcoin crypto bull run on the horizon? We could be forming a bottom, and I will say altcoins, and I know that altcoins don't have as much leg. The altcoins haven't had as much leg lately, except for select altcoins. I will say that. Let me reword that. Select altcoins doing their damn thing, okay? But overall, in my opinion, the altcoin market as a whole, not so much. But speaking of meme coins, I can't help but look at Dogecoin on the weekly. I don't know if anybody else is looking at Dogecoin. Green Fingers, have you looked at Dogecoin on the weekly? What's your opinion on Doge? Let me know what your opposing opinion is on Doge, because I am bullish. I'm bullish, man. I know it's crazy, but I mean, the weekly Dogecoin chart is setting up, man. I can't help but look at it and think, damn, that is looking nice. That is looking good, you know? I want to know what Greenfinger's opinion is. And I want to know what your opinion is as well. We got a poll going right now. Are we bearish? Bearish continuation after falling down here to the 80K range, 80 to 90K range. I mean, we did tap $81,000. I am still looking for Bitcoin around 91. 89,700 is not a good look for Bitcoin, in my opinion. First of all, let me just clarify one thing. I am not a Doge maxi. I am not a Doge maxi. I'm a crypto maximalist. Okay, I'm all Dogecoin, Cardano, XRP. It don't matter if it's a. I mean, you give me Pepe or give me nothing. It really don't matter. I am not a Doge maxi, but I do love Dogecoin simply for the fact that it's one of the most well-known meme coins, and honestly, or cryptocurrencies in general, because of the public and because of the stigma and the memes. I mean, I feel like Dogecoin actually helped play a big role in onboarding a lot of people into the crypto space that otherwise probably wouldn't even be in crypto. Dogecoin, along with other altcoins and meme coins, helped do that, I believe. But guys, are we looking at good times ahead or bad times? I see a lot of mixed signals on the internet. I see a lot of people that are just screaming, hell and brimstone and fire and just destruction in the end times. But then there's this other group of people that are just like, this is beautiful. Everything that's happening is great. We're heading to better times. It's almost split right down the middle. If you really get online and you just look around, it's like split right down the middle, more so than it ever has been. So my question is, what actually is going on? What actually is going on? Do they have us right where they want us? Do they have us right where they want us? let's drop this down real quick, because honestly, the hourly Bitcoin chart is moving. Heavy resistance at 90,000, but we're moving. And if you've seen my Doge trade, Green Fingers, I guess calling me a Doge maxi would be accurate. That would be accurate. That would be accurate. Okay, so let's look at I can't help it, man. Look, we are bro. If we look at the Bitcoin weekly chart though, honestly, if we look at the Bitcoin weekly chart, and we look at what is going on. Oh, I tell you what. Everybody that is talking about, you know, this cycle being almost identical to the previous cycle top and looking very similar, I mean, I can't help but agree with this. Now, a move to the upside from the current price of Bitcoin, similar to what happened back here, makes a lot of sense. The question is, will this time be different? And will we continue higher from there or get rejected like we did before? Because what happens if, you know, we break that cycle? If we really break the 4-year cycle, if the 4-year cycle is really done and we break above that $110,000 level right here, that is the go-to spot. So if we get a bounce on the weekly time frame for Bitcoin, 105 to 110,000, that range right there between 105 110,000, going to be a good area of resistance to look at. That would put in the head and shoulders. That would give us the bearish pattern to look at. But if Bitcoin's price breaks that 105 110, or even if it just holds it and consolidates there, we could be looking at a continuation of this cycle, which is something that we've not ever seen. That would confirm, that would actually confirm that the 4-year cycle is done for all those people that are screaming that it's already done. I don't see no confirmation that it's done yet. There's no confirmation that the 4-year cycle is over yet. But if Bitcoin does what I just mentioned, that would confirm it for me. Even if we consolidate it, if Bitcoin's price could break and hold around 105 to 110 and consolidate there sideways for a period of time instead of just getting rejected immediately like we did back here, that would confirm we're looking at an extended bull market. That would confirm an extended bull market for me. But I will say, if Bitcoin's price does not do that, this is looking so much like this back here that I would almost guarantee you that the price is going to come sweep down below the 200 weekly moving average. I mean, we could even possibly, maybe not quite as bearish as the last bear market, right? Maybe we could hold the 200 weekly moving average potentially without going below it like we did here. Could we hold the 200 weekly moving average around $68,000 to $72,000? $68,000 to $72,000. Previous cycle top, perfect area for support, perfect area for a bottom to form. So much, so likely. There's just so much pointing to that. The only thing that would invalidate that happening is going to be Bitcoin holding those price levels I mentioned. I mean, we are literally resting on the bottom of this indicator exactly like we did here. We did kind of rest and chop on it a little bit. We held support there, got a nice bounce, right? Nice bounce above it. Broke above the indicator, looked good. Everybody was screaming extended cycle back here. Everybody was screaming 4-year cycle is dead back here, just like they are now. And they're doing it before we even broke out, right? They're doing it while we're actually looking extremely bearish. I mean, don't get me wrong. I'm a crypto maxi, okay? I love crypto. I'm bullish on cryptocurrency, but I'm bullish on Bitcoin. But you can't deny that this is bearish. Until we reclaim certain support levels or show some signs of reclaiming certain support levels and show some sign of invalidating this potential head and shoulders. If we cannot invalidate the head and shoulders, then that's also bearish. So there's a lot of things pointing to this. Lots of things pointing to this. So that's what I'm looking at. I'm looking at support near the 200 weekly moving average, 68 to 72,000, which has always been my go-to, even based on just my technicals and my my targets, 72,000. It all confirms all of that. Now, the measured move of the channel, the measured move of the bull market channel, that actually points lower. That points below 65K even. It points all the way to around $53,200 to be exact, which that would get us, that would technically get us, that would put us right there, right below the 200 weekly moving average, right below the 200 weekly moving average, which is very similar to what happened back here, right? How far were we below it back here? About 38% below it right there. I would expect this time to be slightly different, as a lot of other people are expecting this potential bear market to be not as brutal as previous bear markets. Now, there's really nothing to confirm that. That is literally, that's pure speculation, right? That's pure speculation. But I mean, if you think about it, what did we do? Came up here, got rejected, fell down below the 200 weekly moving average for a bit, got back above it. That was confirmation of the bottom being in. Boom, bull market. So now we're back at the same spot. We are here on the bottom of the indicator, just like we were on the bottom of the indicator here before this little bounce. So do we get the little bounce first? Little bounce up to around 100,000. Little bounce up to 100,000 and then reject slightly below the 200 weekly moving average. That would put us in the box here. That would put us in the range there. Right? I mean, it's all lining up. Green fingers, what do you think, man? It's all lining up. So, are we in the position to set up for this bearish move? Bullish move first. Nice little bounce for Bitcoin up to the 100K range. Put in that head and shoulders and fall right on down. That would actually put in the measured move of the head and shoulders as well if we fell down to around this 55K level. Now, what we're looking at here is already playing out, but could we be forming a bottom on the daily? Even Dogecoin's weekly and daily time frame is looking good as well. Could we have put in a slightly higher low right here? That's a good possibility. So far, Bitcoin has literally been holding everything perfectly as I have been pointing out to you guys. The 85K support held. We did bounce close to the 200 daily moving average. Got rejected there. But this could be a slightly higher low on the daily. What I'm looking at, though, is the MACD on the weekly, honestly. And just to pull that up real quick, we're going to use BTCC's chart here. Guys, if you want to trade on BTCC, if you're watching the replay, check it out. Links in the description. Get a 15% deposit bonus on your first time deposit on BTCC. Use my link in the description. Now, the MACD on the weekly, though, I can't help but just feel good about that bounce, that initial bounce on the weekly. I can't help but feel good about that. When you look at the weekly MACD, it does give us a very good potential for this bottom to be forming. And what's crazy is, you know, we were above the bars over here when we crossed and we had a bullish continuation. We were above the bars here when we crossed and had a bullish continuation. And I typically don't trust it as much, right? When it crosses, when we get a cross above the bars, sometimes we can see that not get a good push to the upside. Sometimes that can just get a little rollover consolidation to the side. But with the MACD cross below the bars, with the MACD about to cross below the bars, I mean, think about it for a second. The last time the MACD crossed below the bars, okay, for Bitcoin. Last time the MACD crossed below the bars, look at that on the weekly time frame. The last time that happened, and look at this, we weren't even as low as we are now on the MACD. Right? We're not even as we're lower now on the MACD than we were when it crossed all the way back. Don't look at my Doge trade, by the way. That trade is good. I want to show it though. I'm going to show it just because Green Fingers needs to know about this Doge trade that is negative. Give you a heart attack negative right now, okay? But when you're willing to write it out, man, when you got your eyes set on it and you just know it's going to happen, I'm in there. I'm in there, bro. Should I show it? That's the new poll in the chat, guys. Are we entering a bearish continuation, or is Bitcoin crypto bull run on the horizon? I'm going to show my ridiculous trade. I'm going to show it for Green Fingers. He's been waiting for this. No, it did not get liquidated. No, it's not going to get stopped out. Honestly, you can tell me what you think, but I think it's safe. I don't think I have to worry about anything on that trade. The first time my microphone dipped out on me there, the first time it has done that in a very long time. In a very long time. Let's see. All right, 1 second here. Okay. Oh, we don't need 2 MACDs. We don't need 2 MACDs, just like we don't need 2 McDonald's. Right? Who needs 2 McDonald's? I don't need 2 McDonald's. Nobody needs 2 McDonald's. Am I wrong or am I right? We don't need 2 McDonald's. We don't. Sorry. Okay. I have to say that because we just got another McDonald's where I'm at. And I'm like, bro, really? You could have put anything there besides another McDonald's. You could have put a good grocery store, man. I don't know. You could have put anything there but a McDonald's, bro. Give us another good restaurant. That's an actual restaurant. That's not fast food. Stragerheart, no, man. No. I'm sorry, but no, bro. You don't need McDonald's. Stop eating it. Unless you just have to. I'm not gonna lie. I ate a quarter pounder the other day and it was okay. I mean, but no, Stragerheart. I'm trying to help you, man. Put the Big Macs down, bro. Put the Big Macs down. But what I want to really talk about, man, is the fact that Bitcoin's Mac Dizzle, okay? The Bitcoin Mac Dizzle is in such a juicy spot for a bounce. Unless it goes lower, it could go lower. Nothing about this is for sure, you know? But the fact is, the last time the MACD crossed, and let's see, we are not on the weekly, we are not as low as we could go. So we could go lower. Last time we bottomed, the bottom formed here on the weekly was in August of 2022. August of 2022, the MACD crossed down here below the bars. And what's crazy is if you look at this, look at the MACD. Right now, we've got, you know, lower high there, lower low. I tell you what, we've got 1, 2, 3, bottom, 1, 2, one more little push there to the upside. Ooh, and then bottom. So look, we could still come lower on this, but I really just, when you look at this, when you can, you know, pattern recognition, maybe, I don't know if that's what it is, but I say this is my official statement right now on Bitcoin. This is what I'm going to say. Here's what I'll say. I say we get a bounce. I say we get a move to the upside here. And we come up and test around. I mean, honestly, right near the 100K resistance. The massive psychological 100K level, right? We're going to go to the 100K. We're going to bounce. We're going to hit 100K area-ish, 100K-ish. We're going to test that resistance. If Bitcoin cannot get above that resistance, and if Bitcoin does not reclaim 100K, then I do believe we will put in that head and shoulders. We will come on down. We will put in lower targets. The big question is, does Bitcoin get rejected at 100K or do we hold 100K? And that will be the telltale sign for me. That's the main thing I'm looking at right now. No, green fingers, I'm bullish on Doge. I am bullish on Doge because of just the way, because of the way the price action is setting up, the way it looks, you can't help but be bullish on Dogecoin. And I'm not saying it's going to take off at any moment. No one knows when. No one can time the markets, right? But with the price of Doge being where it's at, and when you look at, when you look at the weekly, when you look at the weekly on Doge, I truly believe that the lowest we're gonna go, the lowest we can possibly go, I think 10 cent support is where we're gonna go if we go lower. But if you look at the weekly, we seem to be trying to form a bottom on the weekly. I believe for Dogecoin, the lowest we can go is that 10 cent support. And I know my targets on Dogecoin are absolutely wild, but who is to say that we cannot reproduce a move similar to what happened here? Who is saying that we can't do that? I know green fingers, you're probably saying we can't do that. But who is saying that we can't produce a move similar to that? Who is saying it? Who would you want to miss it if it? I know that's a big what if. I know we don't trade on what ifs. I know that, but just we can't help but imagine. It's just the fact that we've already seen this move once. Can we see that move again? Now, if you're holding Dogecoin right now, let me know. I want to know in the chat. Are you holding Dogecoin? Who is a Dogecoin maxi? Because Green Fingers thinks I'm a Dogecoin maxi. I'm not a Dogecoin maxi. I'm a crypto maxi. All right, guys, listen. Here's the deal. You guys may not know. You guys may not know, but it is basically I'm becoming an old man very soon. Okay. I'm going to become a very old man very soon, as my birthday is approaching. My birthday month, right? So I think what we should do is, for that whole entire month, maybe every stream should be, how it's like who celebrates their birthday for one day, So maybe we need to just celebrate for a whole month. Deadwood, good to see you. Thank you for being here, man. I was wondering where you might be. I hope that you are safe, man. I hope, by the way, all of you guys here in the U.S. that have been affected by the ice storm and the winter storm, I do hope that all of you guys are doing well and are safe, warm. I hope your families are safe and warm. I hope everyone is safe and warm. Deadwood has a birthday coming up as well. So you know what? We're gonna make it happen. All right, we're gonna make it happen. We're gonna bring it all the way back. We're gonna bring back the 2021 AJC vibes for the birthdays. Okay, we got to. So we'll do that. It'll be fun. It'll be good. Thank you guys for smashing that like button as well, man. That's good, man. At least you ain't covered in ice. At least you are not covered in ice. I honestly agree with this. Adventures of Smokey and the Bandit. You shouldn't celebrate birthdays. That way you never get older. I honestly agree with this. And I may not celebrate my birthday like that, you know? I may just celebrate just to celebrate. But you know what? I agree. Like, I don't even need nobody to sing me happy birthday. That's okay. Now, as far as Dogecoin goes, man, as far as I'm concerned, I mean, even if you, honestly, you can put a secondary line of support in there and try to, like, identify this support that we're looking at. And honestly, I mean, you got a bottom here, got a bottom there, got a bottom here on that support line. I mean, are we going to get a bottom? That's what I'm looking at. That is what I'm looking at right there for Doge. That is some nice support. Not to mention, you know, you've got this beautiful, beautiful pattern setting up as well. This chart's a little bit cluttered, but it's mostly for the long-term perspective. Short-term outlook for Doge. Also still looking very good. Hourly, possible head and shoulders hourly, testing 200 hourly moving average. Might get broke. We might get a breakout to the downside if we get rejected. Continue to get rejected here. Straight back down. Straight back down to support. If that rejection holds. Nice little uptrend on the hourly though. Beautiful uptrend on the hourly. Let's see if that can hold. Got a nice channel on the hourly for Doge as well. Nice channel. You know what? Being able to identify this kind of stuff right here, just this alone, man, is huge. Huge. No rate cut. Interest rates are held steady. No rate cut. But I believe that even though we did not get a rate cut, it does seem like to me we had a lot of very, very dovish outlooks in certain areas of that press conference. Certain questions were, I mean, obviously he had nothing to say for a lot of the questions. Powell is done. Powell said, "I'm done." So, so we're just looking at basically the tone, right? No rate cut, but tone was not that bad. Now, can we really trust it? Really, you know, I mean, Powell's about to leave. He's still got to uphold his position, but obviously he's like, you know what, I have nothing for you. And if there's no data, then there's no data. But it seemed more like he just, you know, so tired of the Powell. You know, where I think that when we get the new Fed chair, it's gonna be something very, very different. And I think really need to be locked in when that new Fed chair is made public. All right, guys, give me a sec. I gotta use the bathroom real quick, and then I'll be right back. Lemonhead sounds good, Deadwood. It's a wild one, man. It is a wild one. We should talk about it. So here's the thing. Okay, so the thing is, the thing is, the liquidation price on that is 6 cents, bro. I personally believe, now, if things change, if something changes, but I personally believe that Dogecoin won't go nowhere near that price. So I am okay with where it's at. And now see, look, the support, channel support, boom. If we cross that 200 hourly moving average again, run to the resistance. But I mean, that does look like a nice little top right there. I mean, we got a nice little formation for a good chode. And it does not go this way, but a good chode, man. Can't go wrong with a good chode. Now, Dogecoin, channel support, bouncing on the channel support. Okay. Could we see it break the 200 hourly moving average? Run to the resistance? Could we consolidate more into the channel? And even though it is a rising channel, and I know that the rising channel, we want to see it break. And I know that the measured move target, typically rising channel is going to break to the downside, right? Resistance at the 200 hourly moving average, but the chode action, Striggerheart. We all know that the chodes, when the chode presents itself to us on the chart, we have to pay attention. We have to pay attention to the chodes, okay? Yes, so it looks nasty, it does, but it also it looks good, but it looks nasty at the same time. The market does that, though. The market does that. We got a possible bearish pattern formation within a rising channel, but we're testing and attempting to try and break the 200 hourly moving average after getting decimated by it here, right? Crossing that would lead to a continuation to the upside. So no matter what, we can look at this bearish, or we can look at it bullish, right? So a little swoop up here. A little swoop up here. Swoop it. If possible. Yes, sir. Yes, sir. Even 9 would be okay. I don't want to see that though, because I want 10 cents to hold, of course. But even a wick down below 10 cents and then a hold at 10 cents is okay. And if you look at the long-term chart, man, 6 cents is so far down there. It's so far down. We've got a lot of support above that. A lot of the support above 6 cents. Enough for me to be confident in it. And I'll be honest, where we're at now is some very good support. This support line is held through multiple years. Minus the liquidation wick right there, and minus this area here. Expect the painful, hope for the rest. We definitely expect the pain. We're going to expect the pain, that's for sure. You know, I haven't posted in a long time. It's been almost, gosh, it's been over 2 weeks, I think. You know, I had a week of issues with the storm and everything, and then of course getting snowed in or iced in and everything. So it's been almost impossible, but no excuse really. There's no excuse. I could still do what I need to do going forward, and I will. Posting regular updates every day, even if they're just short 2 to 3 minute videos. You know, I've got to get my mind back set on what I know I need to do for you guys, for the channel, for people that are subscribed that probably have not seen my videos in ages because I haven't done any videos on altcoins recently. You know, and I need to, you know, all those people that subscribe to the channel for that reason, to stay up to date on my altcoin analysis and stuff, you know, with all those different altcoins that, you know, it's like I've got to do what I know is best for the channel and for the subscribers. And most of my subscribers on this channel came from people that subscribed from altcoin updates, daily altcoin updates. You know, that's what it is. Now, I think that a lot of those people are still out there looking on YouTube for those altcoin analysis videos, and it's like, you know, if I don't have any of those going, then they may not even see any of my streams. They may not, you know, YouTube may not see any, they may not send them any of my content, or they may not care because they're wanting to see my price prediction on Algorand or my price prediction on Chainlink, you know? So I've got to get back on track with that. 100%. Now, I do want to know your opinion, Greenfingers. What is your opinion? Oh yeah, no, I've been completely. I ain't even checked anything, bro. I have not checked anything. I've been locked in on trying to make sure that my family was safe, making sure that if we went, if we lost power, we were literally stuck for days. We couldn't get out of the house, couldn't go nowhere, nobody could get to us. It's been. Thankfully, everything worked out. Though we didn't lose power. We've had plenty of food and everything was good. But I did have to, check on my other family and stuff. And it's been. I have not been trading. I need to be trading. I need to be making some money. I have just been. It's been a trip. It really has. All this damn ice storm and crap has been a trip. It's crazy that this stuff. It seems like this stuff only happens in the U.S., bro. Maybe I just don't hear. Maybe we just don't hear about it in the U.S. whenever things like that happen somewhere else. But I mean, has there ever been a freaking devastating ice storm in Europe? I know there probably has that I just don't know about. I'd have to look it up. But I mean, has there really been? Is it like it is in the U.S.? Is it like it is? I know, bro. I know. It's crazy to me too, honestly. I'll be honest with you. I'll be honest, bro. We out here living on the edge, man. Living on the edge, but that's okay. I seen a video once of a guy. that put a trade in, and that thing went down to like within inches of his liquidation mark, and then it skyrocketed, and it was beautiful. It was beautiful. We're gonna see. Ego got the better of you. Can't be wrong. Oh no, man, no. I for sure. No, I 100% know that I can be wrong. What is that noise, bro? I keep hearing some noise. Yeah, my blood pressure's been a little high over the past couple of weeks. I'm not gonna lie. But we're gonna wait and see what happens. This is still short-term go-to right now. Dogecoin on the short term. 15-minute, 5-minute rising channel, possible head and shoulders formation taking place. So, what is really going on? Bitcoin, shit's crazy, dude. I'm waiting to see what happens here. I mean, this is insane on the weekly. Bitcoin is just setting up for this move and has been for some time, and it's just crazy, honestly, to think about it. Because we have 100% been setting up for this move. And at this point, that channel is done for, right? The channel possibility of the channel support is done for. I've seen you in some trades, but that's next level. I try, man. I try to keep you entertained, bro. I really try to keep you entertained. After all, this is for entertainment purposes only. It's got to be entertaining, right? At least a little bit, even if that means watching me get wrecked, right? But I'm not going to get wrecked. We are not getting wrecked. Not today. Not today. Well, I know one thing. If you just pull up a 1 minute chart and you scalp the 1 minute chart like on the Ethereum right now, honestly, it's been really good the past couple of hours or so, or past hour at least, I would say. Past hour, we've been range bound here in the past hour for a while, bouncing very nicely in between support and resistance on Ethereum. I mean, that support at 2,900 to 2,995 right there, just really good. And then the resistance at around $3,022 playing out very good as well. So until that range really shows a breakout, that's been a very good range to trade on ETH. Famous last words. Famous last words, grilled eggs. That's it, man. And I'm telling you what, man, whenever the merchandise comes out, I mean, I'm going to get a merch. I'm going to get merch going. We're going to have a grilled eggs shirt for Strega Heart, man. we're going to have a grill with some eggs on it. And it's going to be Geit grilled eggs. Nobody is going to know what it means except for us. And that's going to be great. Not today. That's famous last words. Sounds about right, doesn't it? Sounds about right. Sounds about right. She's doing the thing. And this is where we bounce and we run. So Dogecoin, you're going to see Dogecoin at around 16,580 soon, okay? So 16,580. I'm telling you. Yes. Now, I'm not telling you when. I don't know when. I don't know how. I don't know when. I don't know how. But it's going to go there. We're going to see Doge at that price level. Possibly in the next month. Could be even sooner. Could be sooner. Deadwood, you said it right there, bro. We need a green month. Green fingers, I don't think it's gonna. It can't get me. It can't get me, bro. It can't get me. Can't get me, bro. That's that ego talking. That's that ego talking. Strega Heart cannot get me either. Shutting the stream down. Bro, there's 3 people in here. You ain't shutting down shit. I love it, bro. I love it. I'm not paranoid no more, man. I realize, man. I realize, you know, all that paranoia shit, that's for the birds, man. I'm not paranoid no more. I realized what it is, you know. It's obvious what it is. It's just, you know, the consistency, the lack of consistency, I mean. And yeah, about honestly the lack of consistency. Majority of it lack of consistency. Strikeahard got a big red button with my face on it. Well, man, press it for my birthday, bro. I'm gonna smoking chodes, man. Bitcoin weekly chode. Bitcoin has a weekly chode formation. You know, you know what? We're gonna run with that. We're gonna run with that, okay? Just like the Sammy Cup and Handy. Shout out to Sam Price, man. Sammy Cup and Handy does sound kind of funny. I just thought about that the other day, actually, when I seen a post about it. I was like, you know what? The Sammy Cup and Handy does sound a little funny, but it's no more funny than the chode. Man, we're gonna make that the chode, man. Bitcoin's got a weekly chode formation coming. Smoking chode. The chode, okay? We got a 5-minute chode on the Dogecoin chart. Bitcoin with the weekly chode formation trying to form. Who wants to call it a head and shoulders when it obviously looks like a chode? Nobody knows what a chode is anymore, though. Join my chode group, $69 a month. Free chodes for everybody. You know, there's no way. You know, there's a lot of people that don't have a clue what we're talking about. There will be so many. There will be so many that won't have a clue what we're saying. It'll be great. Because I've been saying it for 5 years, man. Chodes on the chart. We got a chode on the chart. I repeat, we got a chode on the chart. But no, the paranoia stuff, yeah, that was too much. I finally realized, like, the majority of what it all really was, you know? And a lot of it was just mistakes I was doing. Mistakes I was making, technical issues, technical mistakes and stuff. As far as the rest of it goes, man, consistency is key. And quality over quantity. But I do know one thing. Daily market analysis videos on, you know, updates on altcoins, Bitcoin, Ethereum, and top altcoins, definitely a must going forward, man. I got to get that rolling. I've been, it's never left my mind, you know. It's just, man. There's no excuse. No excuse though. No excuse. But boy, it's not been easy. No excuse. I'm gonna get rid of some of these lines on here. There we go. Ooh. No, you're right, Green Fingers. I will agree with you on that. I'll agree with you on that. Yep. It's okay, Deadwood. I earned it fair and square. I did. I sure did. Okay. Here's the deal. Here is the deal, guys. Here's the deal. Got the Bob Marley going on. I'm a little bit stuffy. All right, Doge. Come on, what are you going to do for me here? What are you going to do for me here? Tell you what. Pump fun, still in an 83 Jasmine short. Man, let's look at that. Let's see. Oh, I'm telling you, Ethereum. What are we doing? Pump. I mean, pump fun on the 4-hour looks as though we broke out of that channel. I don't know how much you trust a measure move of this channel, but measure move points to somewhat of a significant level there. Did break out, tested it there, broke out, back tested the resistance for support, confirmed support, and bounced out of there too. Nice little uptrend intact. At this resistance, trying to reclaim that as support, previous support. So it looks like we're trying to hold this little range. Obviously, after this run up, looks like either we're going to consolidate here or come back down to that support. Consolidation on this would lead to a continuation on up to that target, I believe. Jasmine. Jasmine is one of those coins that I covered a lot. It's one of those coins that really got a lot of attention. Now, Jasmine right now, 0.00681 for Jasmine coin right now. Now what a beautiful pump we had though. Jasmine pumped above a penny there. Getting rejected, coming straight on back down, but we're looking at a nice pattern. Jasmine on the daily, weekly, longer term time frames, forming this nice rising, broadening wedge or rising, broadening channel between support and resistance. So we are at support. Jasmine's at support. We did get a nice little dip after that initial bounce off of that support. Nice little consolidation and dip after that bounce. But I mean, if you look long term on Jasmine, where we bounced, the reason we bounced so hard there, the reason Jasmine coin bounced so hard is because that is long-term support that goes all the way back to, pre-2022 even. So, if we hold that bounce, even though we're getting pulled back here some, if we hold this support, this long-term support, Jasmine coin has the real potential to run back to this resistance of this falling or descending falling channel. And really, my opinion, Jasmine has the potential at support. Why would we not run to? We've got 3 confirmations on that resistance there. Why would we not hold this as an uptrend here? We could just call it consolidate. We could just keep moving sideways. A lot will depend on what the rest of the market does, what the sentiment is, what is going on with the market. Will depend a lot on what Jasmine coin does. But Jasmine coin at support, at long-term support, bouncing at long-term support. This could be bullish for Jasmine coin here in the short term. The reason, okay, so you're right. You're right. But the reason I do have it in here, I mean, you could like, I guess you could say you could connect this here. We do have a few touches there. We do have a few touches there. And we could say, so you got 1, 2, 3, 4 daily touches. The reason I put it here is because we just have more confirmations, more bounces off of this support line than you would on this one, right? Because you've got 1, 2. This one counts for both support lines. Let's see, 1, 2, 3, 4, 5. Really, you've got about 6 bounces on this other support line. But you could look at this as long-term support as well. But it does not really... I believe that the rising broadening channel plays more... And, has more... I just have more confidence in this support. This bounce, this most recent bounce off of it was a hell of a bounce. And that's another good confirmation of that support line. I mean, we bounced off of it perfectly on the daily, and then Jasmine coin ran for a week straight. For a week straight off of that support. So I think that the fact Jasmine consolidated without a bounce like that, I mean, you had a bounce like that back here. But, I mean, the fact is, drop into that support and then bouncing like that. Good confirmation. So we are at support. Now, could we come lower? If you're looking at that short, I mean, that's still, it's still, like if we go down shorter term, let's go to a shorter term. Let's think about the hourly time frame. I mean, that's like saying, you know, that would be like saying we should go with this right here. We should go with these connections, right? So we should go with this as resistance. Not saying this wouldn't be resistance. This very likely could be resistance out here, somewhere up here if we bounce. But I also believe that cutting through that first little wick there is okay when you have, I believe, and I've done this many times, I mean, you know, you've got all these confirmations on this trend line to confirm that downtrend, even though these two wicks are the first to connect, right? But I mean, that's like the same thing with the longer term chart, same thing. But I'm going to go with this downtrend. We could leave that support in, or that resistance in, and our measured move, if we can find a measured move out of this, it might even run to that resistance, and that would be even more confluence. But let's just look at this, because we've got same thing here, right? I'm going to cut through that wick, right? Go with these bounces, these more confirmed areas of support. I mean, that's a beautiful support, but that was a you know, sharp push to the downside right there. So I'm going to go with this as this falling wedge. I'm going to go with this right here. Now, what's our measure move going to be? You know, you can do whatever you want with it, but we can go here for conservative. I'm going here for the more, you know, bullish case. Oh, and would you look at that? It does line up with your resistance, green fingers, the real resistance. It aligns with it. It does, but short term, we're going to look at the conservative, just of the wedge itself, you know, of the wedge itself. Just depends too, you know, if we consolidate to the tip or if we break out sooner. But that is pretty wild, you know. You've got this pattern formation here. Got this pattern formation. Targets leading. I mean, got consolidate into the bounce, you know. Consolidate into the bounce. I mean, it just, like, how are we gonna have that confluence and it not play out, man? Look at that. So we got these two touches confirmed there, and our measurement confirms that resistance up there. So we're going to look at that. And that makes a lot of sense. Look how close it is to my trend line at 0.0125. Even more confluence, because that goes on back to my support up here, right? And I know there's support down here as well, but there's a reason for that, because we have ranges to look at. So we're going to look at that as the range, right? Support range to look at. And that actually lines up with what's going on here. After that nice bounce on long-term support for Jasmine. And I think it played out good, you know. That's beautiful. That's beautiful. But we're going to see, right? We'll see. We'll come back to this. We'll come back to this chart. We'll see what happens. You know, invalidate it. Okay, so what? Let it invalidate. I don't, like, that's the thing. I mean, you definitely are wrong where you say, I think I'm always right. I don't think I'm always right. I will always say that, you know, invalidation station. That was my saying. Let's step into the speculation station, the invalidation station. Anything with, you know, we're gonna make it all. It's all train stations. We're all aboard, all aboard. We're at the invalidation station here. Let's see if we can invalidate this pattern and this breakout for Jasmine Coin. Are we gonna see this consolidate to the tip of this and bust a move to the upside? we have to just be willing to adapt, you know. With that being said, I need to adapt. I need to adapt right now. We're going to adapt because I do have things to do. But I do want to have a party stream soon. We're going to do a party stream soon with all the bells and whistles, okay? We're going to have to. We're going to have to do it soon. But it is great to see you guys, man, after so long, because it has been a while. It has been a while. Yes, adapt. Yes, we have to always be willing to adapt. You have to be willing to adapt in all areas of life. People that don't adapt just get stuck. Gotta be willing to adapt. Stick to what works. You obviously do what you know works. But everything does go up eventually. It does. What goes down must come up, right? What goes up must come down. So it does. Everything does eventually go up. You like that, don't you, Green Fingers? You like that, don't you, my friend? Oh man, when am I gonna short? Well, I'm not gonna short right now because, you know, the market's already down from all-time highs so far. I don't like it. I'd rather short when we're up a bit more, you know what I'm saying? Not saying we couldn't go lower. Everything can always go lower. It can go up, it can go down, it can go sideways, go all around, but I don't know. I don't think that now is a great time to short. At least not on the time frames I've been looking at. And I mean, I could be totally, or the coins that I'm looking at. Also, Green Fingers, I have to adapt and, you know, I have to adapt and spend more time listening to you before I can short, man. That's just all there is to it at this point, man. I appreciate you, bro. I appreciate all of you. Straight of heart. I even appreciate you shutting us down, man. I appreciate it all, man. I really do. Thank you guys so much. And I will see you guys soon. I apologize for being absent, but we're going to fix that. I just have to get the ball moving, man. And yeah, we got to see what happens, man. We got to revisit this Jasmine chart, though. Next stream, we're going to revisit this. We're going to see what happens. Yeah, look, I'm going to go ahead and draw this in for you, Green Fingers, here. Let's go ahead and draw this in. So this is what's either going to happen from here on the 4 hour. Jasmine's either going to do this. Straight up. Everything goes up. Or we're going to roll over and come on down. Let's see what happens. Does it invalidate? Or does it play out? We'll revisit it soon. Whew. I tell you what, Jasmine running to over a penny though, that's a bad mother lover right there. I swear. Alright guys. I appreciate y'all. I'll see y'all in the next one. Stay safe, stay warm out there.